Welcome back to the Malaysia Money Matters show. It's the 29th of April, 2025. Today, we're going to dive into the latest financial news, covering both Malaysia and the global scene.
Sounds good. Lots happening as always.
Absolutely. Let's start with what's been going on right here at home. We've got quite a few company updates.
Indeed. It's interesting seeing how different sectors are, navigating the current climate.
Okay, let's kick off with Continental, the tire maker. They're closing their Alor Setar Plant.
Right. By the end of 2025. That's a big one.
Yeah, 46 years it's been running, and it impacts about 950 employees.
950 people. That's significant for Alor Setar.
It is. This plant handles tires for passenger cars, light trucks, even motorcycles for the whole Asia-Pacific region.
So after this, they'll just have the Petaling Jaya facility left for the off-the-road tires.
That's right. Just the one facility left producing those larger tires. What's the thinking here, do you reckon?
Well, it really highlights the pressure, doesn't it, in the tire manufacturing game in this region. It's probably about staying competitive, adjusting to maybe changing customer demands, electric vehicles, different tire needs, perhaps.
Could be a strategic adjustment, maybe. But still, tough news for those employees.
Absolutely. A major local impact.
Okay, moving to British American Tobacco Malaysia, B8T. They're stopping sales of their Vuse vape products.
Yes, I saw that. By Q3 2025.
Yeah, third quarter. It's to comply with the new Control of Smoking Products for Public Health Act.
The one that takes full effect in October.
Exactly. The act that bans sales of smoking products, vapes included, to under 18s.
Right. And BD thinks it won't hit their financials much this year.
Apparently not significantly for 2025. But what's your take? Regulatory impact.
Definitely. It's regulation driving a business decision, plain and simple. It might set a trend for others in the vaping market, too, as rules tighten.
Good point. Okay, let's turn to Bursa Malaysia. Their Q1 net profit, it saw a dip.
Down nearly 9%, wasn't it? Revenue slightly off, too.
Yeah, mainly lower securities trading activity. But they're still sounding pretty confident about their full-year targets.
Profit before tax goal of, what, RM 369 to 408 million? And 60 IPOs.
That's the aim. Securities market revenue dropped, but derivatives, Islamic, and data markets actually improved.
So a bit of a mixed bag. Shows how much they depend on trading volume, but also some resilience from other areas. 60 IPOs, though. That seems ambitious in this climate. We'll have to watch that one.
Definitely. Now, some better news. Palm oil.
The CPTPP shipment.
That's the one. An 8,000-ton shipment from Sabah got into the UK tariff-free under the agreement.
First one since the UK joined the bloc.
Exactly. Big boost for trade between Malaysia and the UK, expanding markets. Why is this so important?
Well, it's a concrete benefit of the CPTPP, isn't it?
Yeah.
It makes our palm oil cheaper, more competitive in the UK market against non-members. And the UK is a pretty major trading partner for us in Southeast Asia. Could really help export volumes.
Good stuff. Okay, on the flip side, CTOS digital shares. They hit a record low.
Ouch. After that 30% drop in Q1 net profit.
Yeah, they're blaming higher costs, and analysts are cutting outlooks now.
Worried about slowing economic activity, I suppose, and that tax exemption expiring in 2027.
Seems like it. Concerns about tariff pressures hitting businesses could also affect demand for CTOS services. The market's clearly worried.
Yeah, that share price drop speaks volumes about investor concerns on profitability.
Right. Shifting gears slightly, Duo Pharma Biotech landed another government contract.
Another one. They seem to be doing well on that front.
They are. This one's RM 1.81 million from Pharmaniaga Logistics, brings their total government contracts to 100.
Wow, 100 contracts, valued at over RM 684 million.
Yep. This latest one runs until the end of 2026. What's the takeaway?
Just underscores their strong position, really. Reliability in the national pharmaceutical supply chain. Gives them a stable revenue base.
Makes sense. Now over to the East Coast. The ECRDC has some good news from Terengganu.
Oh, yeah. What's happening there?
They facilitated RM 1 billion in committed investments in just the first quarter of 2025.
1 billion. That's impressive. Already 43% of their whole year target.
Exactly. Mostly tourism, but also agriculture, manufacturing, services. Realized investments are over RM 700 million, creating over 1,000 jobs.
That's very positive for Terengganu.
Yeah.
Diversified investment, too, which is good for resilience. Great for local jobs.
Definitely. Okay, a quick update on tax. The expanded SST, it's been delayed.
The sales and service tax expansion. Wasn't that due May 1st?
It was. Now it's pushed to June 1st. They need more time to fine-tune the guidelines.
Interesting timing. especially with all the chatter about U.S. tariffs impacting the global economy.
Exactly. The delay probably reflects that caution. Gives businesses a bit more breathing room, which I imagine is why.
Probably. Okay, what about F&N, Fraser and Neve?
Their Q2 net profit dropped 15%. Higher taxes, losses from their new dairy farm startup, and lower revenue.
Lower revenue in Malaysia? Subdued consumer sentiment, maybe? The
Yeah,
floods probably didn't help either.
seems to be the case. They did declare an interim dividend, though, 30 cents per share.
So, managing multiple challenges. Tax changes, new venture costs, consumer demand shifts. The dividend might be to keep investors happy despite the profit dip.
Could be. Now, some action in the tech space. MITA, FMM, and Bintang Capital Partners.
Ah, the Bintang Semiconductor Impact Fund.
That's it. Launching fund to boost the local semiconductor value chain, get companies IPO ready, focus on sustainability, too.
That's strategically important, isn't it?
Yeah.
Strengthening our position in a critical global industry. Good for high-tech growth and jobs.
Agreed. Nestle Malaysia also saw a Q1 profit dip, down 17.5%.
Despite revenue being flat, what's driving that?
Higher input costs and marketing expenses, mainly. Export sales were up, though, and domestic sales recovering.
Right. Rising costs are hitting lots of consumer goods companies. They expect things to improve in the first half, though.
Yeah, they're forecasting a return to healthier growth levels soon.
Okay, let's hope so.
On a brighter note, Oriental Interest. Their Q2 net profits surged nearly 160%.
Wow, 160%. What's driving that?
Strong performance in property development. They even declared a special dividend of 20 cents.
A special dividend, too. Sounds like the property set is doing very well for them. Do they have projects lined up?
Yeah, substantial unbilled property sales, apparently, so the momentum might continue.
Good for them. And PGF Capital.
They had their best quarterly net profit since 2017, boosted partly by reversing an impairment loss.
An impairment reversal. That can give a nice one-off boost to the numbers.
Definitely. They also proposed a final dividend of 1 cent. They're expecting their insulation segment, especially in Australia, to stay strong.
Okay, so underlying business looking positive, too, particularly overseas.
Seems like it.
Yeah.
And reached 10 holdings. They're debuting on the main market soon, May 2nd.
And they just reported record profit for 2024.
Yep, up over 37%. Driven by finishing projects in telecoms, they're planning to expand their fiber optic network in Sarawak, too.
Record profit just before listing is always a good look. Shows strong momentum. And expansion plans in Sarawak signal growth ambitions.
Right. Reservoir Link Energy secured a contract, too.
Oil and gas sector.
Yeah, a 3-year deal with Enquest Petroleum Production Malaysia for providing equipment and services for offshore wells.
Solid win. Provides steady work and revenue in that specialized offshore market.
Okay. And SuperComnet Technologies. TA Securities is forecasting strong profit growth for Q1.
Up to 30% growth. What's the driver?
Strong sales in their medical segment, mainly. Apparently, the impact from U.S. tariffs is seen as manageable.
Interesting. Medical segment resilience. And they're talking to potential new auto clients.
That's the word. Could bring diversification.
Good strategy.
Finally, on the local front, Transport Minister Anthony Loke is pushing for faster approval for that new AI-driven container port in Port Dickson.
Ah, the PD port project. He's emphasizing its importance for Negeri Sembilan and the Malaysia Vision Valley 2.0.
Exactly. What could this mean for the area?
Well, a modern AI-driven port, that could be a major infrastructure boost for Negeri Sembilan. Better logistics, more trade, supporting that whole Vision Valley plan. Big potential.
Okay, quite a lot happening locally. Let's switch gears now and look internationally. Keep it fairly brief.
Right. Global picture.
First up, the Bank of Japan. Looks like they're going to pause on rate hikes this week.
Yeah, expected to keep the benchmark rate at 0.5%, mostly because of the uncertainty from U.S. tariffs, right?
Seems so. What's the ripple effect of Japan holding steady?
It just shows that broader caution among central banks, doesn't it? Worries about trade wars slowing things down globally.
Meanwhile, over in Europe, the ECB is apparently gearing up for rate cuts.
Also citing potential damage from U.S. tariffs and weaker growth, softer inflation over there.
Yeah. Strengthens the case for a cut, maybe as soon as June. What's the outlook there?
It suggests they're quite concerned about the economic hit from trade tensions and are looking to get ahead of it, support growth.
Okay. Elsewhere, China's approved 10 new nuclear reactors.
10 more. That's a huge commitment. Signals they're really pushing nuclear as part of their clean energy strategy.
4th year in a row, with at least 10 approvals. They're on track to be the world's biggest nuclear generator.
Definitely a long-term energy security and emissions reduction play.
The EU's imposed hefty duties on some Chinese machinery. nearly 67% on machines that lift construction workers.
Citing unfair subsidies and low prices, trying to protect their own producers.
That's the reason given. Another sign of those trade frictions heating up. More costs, potentially.
Right.
Interesting side note, European power prices actually went negative over the weekend.
Below zero. How did that happen?
A big surge in solar power output due to sunny weather. It's happening more often as they install more solar capacity.
Wow. Shows the growing impact of renewables, but also the grid management challenges they bring.
Exactly. Now, a Reuters poll. Economists see a high risk of global recession this year.
High risk. And they're pointing the finger mainly at
U.S. President Trump's tariffs impacting business sentiment. Many have cut their 2025 global growth forecasts, too.
So a growing consensus among economists that protectionism is really hurting confidence in growth prospects.
And speaking of tariffs, those increased U.S. ones on China expected to cause a supply shock in the U.S.
Cargo shipments plummeting. Retailers worried about empty shelves and higher prices soon.
Yeah, potentially by mid-May. Shows the immediate impact tariffs can have on supply chains and consumers.
And even if they ease up, restarting trade could be slow and costly.
Seems likely. Also, foreign direct investment into Asia, excluding China, hit a low point in 2024.
Lowest since 2012. ANZ research thinks a recovery isn't likely soon because of trade tensions.
That's their take. Uncertainty is deterring investment in the region outside of China. Could slow things down.
Makes sense. Investors don't like uncertainty.
Yet despite all this gloom, global stock markets have kind of held their ground recently.
Some optimism maybe, or just confusion about where U.S. trade policy is actually heading.
Could be either. Reflects maybe hope the worst tariff pain is over, but yeah, lots of confusion persists. Dollar's under pressure too.
So markets are resilient, but maybe cautious, waiting for clarity.
Perhaps. And last one internationally, Japan's Prime Minister Ishiba, his approval rating's down.
Lowest since he took office? Cost of living biting.
Seems to be a key factor. He's announced measures on gasoline prices and utility subsidies in response.
Trying to address those public concerns directly shows the political heat from economic pressures.
Okay, let's quickly touch on political news. Here in Malaysia, the Data Sharing Act 2025 is now in effect.
Right. The framework for government agencies to share data securely to improve public services.
That's the goal. Should make things more efficient, hopefully, with strict oversight, of course.
Potential for streamlining, but data privacy will be key.
Indeed. Also in Malaysia, the opposition leader in Negeri Sembilan raised concerns about youth vaping.
Calling it a serious public health threat.
Yes. Just highlights that the vaping debate, especially around young people, is still very much alive at the state level.
Likely to remain a focus for policy.
Moving to the U.S.-China dynamic, confusion continues. Trump claims progress on trade talks.
But Treasury Secretary Besant didn't confirm talks were even happening.
Exactly. It just adds to the market uncertainty when you get conflicting signals like that.
Yeah, makes it hard for anyone to plan.
U.S.-Iran nuclear talks are apparently ongoing in Oman.
But the Iranians sound cautious about success.
Seems that way. Talks are happening, which is something, but significant hurdles likely remain.
Okay.
And finally, top U.S. officials urged Russia and Ukraine to make progress on a peace deal following that Trump-Zelensky meeting.
So continued U.S. diplomatic push for a resolution there.
Right. Okay, so we've covered a lot. Local companies, global trade jitters, political moves. What really jumps out as the most, maybe not exciting, but significant development today, considering how linked everything is?
You know, looking at the big picture, I think it's that combination. The delayed implementation of the expanded SST here in Malaysia, happening right alongside these growing warnings about a potential global recession, largely driven by those U.S. tariffs. It's a really complex mix.
It really is, because on one side, the SST delay gives our local businesses a bit more time, a bit of breathing space to adapt, especially with all this global uncertainty swirling around.
Exactly. A bit of welcome relief, probably. But then on the other side, you have these serious concerns about a global slowdown, tied directly to the trade policies of a huge economy like the U.S. That could definitely impact Malaysia's growth, our exports, everything.
It's such a delicate balancing act, and definitely something you, as a listener, should probably keep a close eye on. How these global headwinds play out could really filter down to local businesses and ultimately your own wallet.
Precisely. It poses that key question for you, doesn't it? How might these global economic shifts, combined with changes in our domestic tax policy, influence your financial planning, your investment choices in the coming months? It's definitely food for thought.
Absolutely. Well, that's a wrap on today's deep dive for the Malaysia Money Matters show. We hope we've helped shed some light on these key financial and economic happenings.
Yeah, trying to connect the dots.
To stay up to date and get these analyses regularly, please do subscribe to the Malaysia Money Matters podcast wherever you get your podcasts.
We'll be back soon with more insights. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.